For many regional rural bank employees, the recent years have been a period of major change. RRBs have reported strong business growth. Profits have improved. Digital banking has expanded. But despite these achievements, one issue continues to frustrate many employees across the country: performance-linked incentive. While some RRBs have already implemented PLI, employees in many other regional rural banks are still waiting. The question being asked by employees is simple: if RRBs are performing well, why is PLI still pending in so many banks? Performance-linked incentive is intended to reward employees based on the overall performance of the institution. The concept is not new. Across the banking industry, PLI is often seen as recognition for the contribution made by employees towards profitability, business growth, and operational performance. For employees, it is not just about additional income. Many view it as recognition of their hard work and commitment. Especially in regional rural banks where employees often work in remote locations, manage multiple responsibilities, and operate with limited manpower. According to reports, PLI had been implemented only in a limited number of regional rural banks. The banks identified as having implemented PLI included Karnataka Gramina Bank, Tripura Gramin Bank, Puducherry Grama Bank, Uttar Pradesh Gramin Bank. However, many other RRBs had not yet implemented the scheme. This created a situation where employees performing similar work in different RRBs were receiving different benefits. Employees argued that such uneven implementation creates disparities within the sector and affects morale. The concern is not merely about money. Many employees believe delayed implementation sends the wrong message. RRBs have consistently highlighted achievements: rising business volumes, improved profits, expansion of banking services, and increased financial inclusion. Yet employees in several banks feel they have not received the same recognition as their counterparts elsewhere. The feeling among many staff members is that while performance expectations are increasing, the corresponding benefits are not reaching everyone equally. This has become a major talking point in employee circles. As employee dissatisfaction grew, the issue began appearing in representations made by RRB unions. RBI highlighted non-payment of performance-linked incentive as one of several major unresolved issues facing employees. The association also raised concerns regarding service rules, promotion policies, staff shortages, and sponsor bank deputation. The message from employee representatives was clear. Pending issues, including PLI, needed timely resolution to maintain employee morale and operational stability. A significant development occurred during conciliation proceedings held on 5th June 2026. Representatives from RBI, Department of Financial Services, NABARD, and various RRBs participated in discussions regarding several long-pending employee issues. During the meeting, DFS informed the union that a revised PLI scheme was in the final stages. According to the minutes referenced in reports, DFS indicated that the revised scheme was likely to be implemented within about a month. This was one of the reasons the proposed nationwide strike was deferred. For many employees, this announcement offered hope that a long-awaited solution may finally be approaching. Even if a revised PLI scheme is introduced, employees are asking another important question. Will implementation be uniform across all RRBs? One of the major criticisms of the current situation is the lack of consistency. Employees argue that RRB staff across the country operate under similar challenges. Therefore, they believe incentives should also be applied consistently. The demand is not only for implementation. The demand is for fair implementation. Another discussion taking place within the banking industry relates to the structure of PLI itself. Concerns raised by unions regarding different payout structures across various officer scales. Some employee representatives argued that incentive systems should not create divisions within the workforce. The broader debate is about balancing performance recognition with fairness and inclusiveness. Although these discussions extend beyond RRBs, many employees are closely watching how future PLI policies are designed. The PLI issue is about more than a single benefit. It touches larger questions about employee motivation and retention. Regional rural banks today face several workforce challenges: staff shortages, increasing workload, promotion concerns, attrition, and rural posting challenges. Employee representatives often argue that timely implementation of agreed benefits helps improve morale and strengthen the institution. When employees feel valued, it can positively impact productivity, customer service, and long-term stability. As of now, many employees are still waiting. The Department of Financial Services has indicated that a revised PLI framework may be issued soon. Whether that leads to a uniform and timely rollout across all regional rural banks is something employees will be watching closely in the coming weeks. For thousands of RRB employees, the issue is not just about an incentive. It is about recognition. Have PLI delays affected you or someone you know in the RRB sector? Let us know your thoughts in the comments.